All right, today we're going to tackle one of the most talked about and maybe one of the most controversial stocks out there for income investors, Arbor Realty Trust. You probably know it as ABR. And this thing is a real puzzle. It's sending two completely different signals at the same time, one of serious trouble and another of a massive opportunity. So let's break it down and figure out what's really going on here. Okay, first things first, just look at this number. A dividend yield that's consistently over 15%. I mean, come on. In today's market, that is just a wild figure. It's the kind of number that stops you in your tracks and makes you look twice. But a yield that high, it always brings up one very important question. And that's the big one, isn't it? What's the catch? You just don't see yields like that without some serious risk attached. The market is basically screaming that there's something going on here. A story filled with a ton of uncertainty. And that's the exact puzzle we're going to try and piece together today. So what does Arbor Realty Trust even do? Well, they're what's called a mortgage REIT. Now, the simplest way to think about this is they're not the landlord, they're the landlord's bank. They don't own the apartment buildings themselves, they own the loans on those buildings. They make their money by collecting interest from the real estate developers. So to really get why that dividend is so huge, we have to start with the bad news. We've got to explore the story of the stock's big decline. Let's dig into the bear case, all the reasons for the fear that's been pushing this stock price down. And yeah, that fear is totally justified when you look at the numbers. Over the last couple of years, this stock has just been hammered, dropping somewhere between 35 and 45% of its value. That is a brutal hit, and it's definitely shaken up a lot of investors. And what's really fascinating is that the stock chart itself seems to be telling this pessimistic story. If you're into technical analysis, you see this clear price ceiling. They call it resistance. It's like a lid the stock just can't seem to push through. On top of that, the short-term price trend has dropped below the long-term one, which is another classic warning sign. The chart is basically waving a big red flag. And look, this isn't just about some squiggly lines on a chart. This stuff is tied to real problems in the business. They're bridge loans. The short-term loans that help developers get projects started are under a lot of stress. They've even had to sell some assets at a loss. And now revenue is actually expected to go down while they work on cleaning up these problem loans from the past. But hold on, that's only one side of the coin. For every bear growling about risk, there's a bull who's seeing a huge opportunity. So let's flip this around now and unpack the case for a comeback. And wow, this is where the story gets really interesting. Because while that price chart looks awful, the company's valuation metrics look amazing. The stock is trading for about half of its book value. Now, book value is basically what the company would be worth if it sold off everything. So it's kind of like getting the chance to buy $1 worth of assets for just 50 cents. And this is absolutely crucial. The company isn't just sitting back and hoping things get better. Nope, they're making a big strategic move. They're expanding into these much more popular markets, like single-family rentals. It's a clear attempt to move toward more stable, faster-growing parts of the market. I saw one analysis that just nailed it with this quote. It's this perfect storm, this classic divergence. The stock's price is telling you a story of weakness, but the actual business fundamentals, well, they seem to be telling a story of deep value and potential improvement. The two just don't line up. So let's just lay it all out here, side by side. You've got the bear case. Weak stock price, falling revenue, risky loans, a lot to worry about. But then you have the bull case. It looks incredibly undervalued. The earnings seem stable. There's that giant dividend. And, as we're about to see, some serious confidence from the people on the inside. And this right here is a powerful signal. We're talking about the insiders, the executives, the directors, the people who know the company better than anyone. They've recently bought almost $3 million worth of their own stock. And maybe just as important, none of them are selling. They are literally putting their own money where their mouth is. Of course, none of this is happening in a bubble. ABR's future really depends on some big picture economic forces. So we have to zoom out and look at the wild cards in the economy that could tip the scales for them. Honestly, a lot of this comes down to interest rates. Think of it like a chain reaction. The high rates we've had are what caused all this pain in the first place. But if the Federal Reserve starts cutting rates, which many people expect, that could change everything. All of a sudden, it becomes easier for their borrowers to get new loans, which helps property values, and that brings relief to ABR's whole business. And let's not lose sight of the really long-term trend here. With all this short-term noise, the basic fact is that people in the US still desperately need apartments and affordable places to rent. That underlying demand is incredibly strong, and it acts as a powerful tailwind for Arbor's main business, year after year.
Okay, we've seen the bear case, we've seen the bull case, we've looked at the wider economy, so now let's try to put all these pieces together and look at the three possible ways this could all play out for Arbor Realty Trust.
You can really see three different paths forward here. The lowest bar, that's the bear case. The loan problems get worse, and they might even have to cut that huge dividend. The middle bar is kind of the muddle-through scenario. Things slowly get better with some decent upside. But that top bar, the bull case, that's where the stock could really take off if the market finally starts to believe the value story. So if you're gonna boil it all down, these are the four big themes you have to juggle in your head when you think about ABR. It's a deep value play, and it's a high-yield machine. But that comes packaged with risk from stressed-out loans and a huge sensitivity to what the Fed does with interest rates. So what's the bottom line here? Arbor Realty Trust is pretty much the textbook definition of a high-risk, high-yield stock. This is a company in transition, trying to fix its problems while navigating a really tricky economy. The potential reward is massive for sure, but so are the risks. Which brings us right back to that ultimate question we started with. Is Arbor Realty Trust a high-yield trap just waiting to spring on unsuspecting investors? Or is it a genuine, deep value treasure, hiding right out in the open? In the end, the answer really seems to depend on which one of those two stories you believe. Thanks for tuning in.